Morning all, and welcome to the market view for Wednesday the 19th of March 2014. And starting off with the daily chart, we can see that prices moved lower yesterday, trading below the 165.50 area there, which is also the 62% retracement which I pointed out in yesterday's market view. And the market rallying back and closing back above the 165.82 again. So let me just remove these just for a second. I'm just going to remove all of these other lines as well, just so that it gives us a clearer picture. So the market trading back and sort of the moment staying above the 165.82 area there. This is become a major support area. Should prices move higher today, you can expect to see some sort of resistance in this area here, 166.51 or 166.75 there, between the two psychological areas there. So that's what's going on there. If we look at the smaller time frame, let's just go to the 30-minute and have a look at yesterday. The market sold off sharply, no reason why, unless it's the Ukraine-Russia thing that's in the background at the moment, the geopolitical news. And then found some support, and there's an interesting price bar for you. Just put the crosshairs on there, and then just do that. Notice the market sold off here. We've got the selling in the market, and then we have this green bar with prices coming off the lows. And then the net effect is we see the market moving to the upside there, up towards the DP level, and then some potential weakness coming into the market as well, with what's known as an upthrust. Prices are thrust up and then come back down to close on the low. The selling resumes, the buying comes back to try and hold the market. The market comes off the high now below the psychological level of 166 there, and the same thing again, then further selling. And then we have the opposite this time. We've got red volume with a green candle, whereas here we had a red candle with green volume. And when you get the opposites in these candles and volume bars, they're well worth noting. This one yesterday I actually recorded the move back to the upside here, showing you you could actually trade this. And if you just give me a moment, I will get the footage and show you. So here you can see the close-up now. You've got the green volume there with the red candle, and I've marked up the trade, and also see that the market came back 76% as well, and then prices eventually started to move higher. Then you can see heading back towards the scalp area there. A new trade comes in as well, which wasn't filled because of the weakness that followed. But what I'm showing you here is that by reading what's going on in the market, and I'm going to do some more advanced videos on this, so you don't have to wait for the PTPs, and you can take more trading opportunities by understanding how the markets work. And I shall start recording those next week, and the theories behind this, and why it's great to be able to have that facility to actually read what's going on in the market. So in a second you'll just see this switch over to the market hitting the scalp point, and then later on in the day what actually happened as well. So there you see the scalp being hit, and any second now you'll see the remainder of what actually followed. So that was a way of actually trading that with just a 20 pip loss there. And again, there's more advanced techniques that we can use by actually buying into the market down at these levels as well. But like I say, I will work on that for you next week to show you exactly what can and can't be done when you actually are aware of what's going on in the market and how the pros actually play it. Because at the end of the day, it is predictable. It's not random, as others would have you believe. So yeah, you can see the market sitting on the scalp area there. Right, let's go back to today and have a look and see what economic news items we got out later on today. So let's have a look at the news. We've got UK news today at 9:30, MPC official bank rate votes. This is from last month. It's forecast that everybody voted to keep, or the 9 members voted to keep interest rates unchanged. Unemployment rates at 9:30 as well should move the market a bit. This will be an interesting one because Carney was going to increase interest rates if the unemployment rate dropped to 7% or below. Funny how now they're keeping this above, because obviously the increase in interest rates would impact on a huge number of voters for the general election next year. Just a coincidence and nothing to worry about there. So the claimant count change out at 9:30, and then you've got 12:30 annual budget release. Of course, it's budget day today, so 12:30. Stay out of the market. Expect a bit of volatility as Osborne does his works his magic with the figures. And FOM statement tonight at 6 p.m, normally 7, but we're still on the different time difference here. The US are in daylight savings. We don't go to BST until the 30th, I'm told. So that's the early hours of Sunday morning, the 30th of March, which is a week on Saturday. So we've got this time difference for the next couple of weeks there. So Fed statement at 6 p.m. So a bit more volatility around today. We should see a bit more movement, as it were. At the moment, the market's stuck in this sideways range. We could get a move before we get the MPC announcement and the unemployment figures, and then the market go in the other direction. Wouldn't be uncommon to see that, especially if the figures come out so that Carney isn't forced to raise rates. So that's it from me this morning. Have a great day. I will be back tomorrow morning, all things being equal. As ever, thank you for your support and also for watching.